No fireworks from TCS in Q4. Top line misses expectations with dollar revenues declining by about 1%. The company hands out bonuses to employees worth over 2,600 crore rupees.
The FIIs approached the government that they have a problem. The government addressed that problem, provided them exemption, naturally with prospective effect. By doing so, government has isolated the past problem and government has segregated the future problem.
The government is facing unfair criticism from FII that are seeking MAT exemption, says Revenue Secretary, asserts the tax exemption cannot be retrospective when there's a court order.
The bears prevail on Dalal Street once again amidst volatility. The Sensex sheds over 130 points, but the Nifty manages to defend 8,700. Mid-cap sees sharper cuts.
Ola Cap strengthens its arsenal and steps up its expansion drive, raises $400 million from a clutch of venture capital firms, hopes to be present in 200 cities by the end of this year from 100 currently.
The Mumbai police is not taking the threat mail to RBI Governor Raghuram Rajan lightly. The email allegedly sent from a proxy server bearing the name of the Islamic State is under investigation.
Nokia asked the Delhi High Court to lift the freeze on its manufacturing facility in Chennai, says there are potential buyers and a deal cannot be closed with the freeze in effect. Court to hear the case tomorrow.
Prime Minister Modi is among the Time magazine's 100 most influential people in the world. Barack Obama writes about Modi, calling him India's reformer-in-chief. ICICI Bank's Chanda Kochhar and Microsoft's Satya Nadella also make the cut.
In a bid to clean up the power sector in the national capital, the state government asked DISCOMs for information about former power department officials who now work for them. DISCOMs also told to submit names of former bureaucrats that work for their subsidiaries.
We haven't decided on anything, so once we decide on IPOs, only then the question of what that amount comes to and all that. And so there's been absolutely no decision on that, nothing new on that front.
Indigo's President Aditya Ghosh denies any plans of launching an IPO anytime soon. Tells CNBC TV 18 the airline is flattered by Qatar Airways' offer to invest, but says it's not looking for any partners just yet.
Now to put restrictions on access to an application of choice will be very anti-consumer.
Former CEO of Airtel and now the chairman of Micromax, Sanjay Kapoor bats for net neutrality, says restricting access to specific websites and apps is anti-consumer.
We had informed the people that he has gone for a sabbatical, he has gone to introspect. So is this the problem of others?
क्या राहुल गांधी seriously politics करेंगे या वो politics छोड़ेंगे? ये बड़ा प्रश्न, यक्ष प्रश्न आज देश के सामने है.
Well, after a 58-day sabbatical in a South Asian country, Congress President Rahul Gandhi is back. His party's supporters seem to be celebrating, but he's facing flack not just from the opposition, but even some senior Congress leaders voicing dissent. Will he be elevated as Congress Party President? That is the big question. Rahul Gandhi is expected to lead the Congress Party's agitation against the land bill closer to the session resuming around the 20th of April. Good evening. Thanks very much for joining us on India Business Hour. Nentar, do you know where Rahul Gandhi went?
No, I don't know where he went, but apparently he was undertaking a Vipassana course in Myanmar, but Shireen, details remain sketchy, including of him perhaps missing a flight and was supposed to return yesterday.
Okay, let's not speculate any further on that issue. He's back. He's got a party to run. Will he be made president or not? That's what matters. On to the big story tonight. The day's market action. The bears prevailing once again in what was another volatile session. The bulls did try to recoup some losses in the last hour, but then the major indices ended in the red. The Nifty was trading below the 8,700 mark. For most part of the day, it managed to get just above that mark in the last few minutes. The Sensex also lost about 130 points, slipping further away from 29,000. Mid-caps underperforming today. The mid-cap index lost about 1% this afternoon. That was the market action. On to the big earnings. Technology giant TCS has turned in a slightly muted set of Q4 numbers. Now, the fourth quarter was expected to be a tough one for the company, but cross-currency headwinds have hurt performance by about 270 basis points, and that had TCS struggling. Net profit has risen a lower than expected 8% quarter-on-quarter as rupee revenues fell over 1% and dollar revenues came in 0.8% lower. For the full year, margins have come under pressure, but that was more due to the fact, and this is the big story, the company has declared a one-time bonus to employees to commemorate 10 years of being a listed entity. The IT major will pay a week's salary for every year spent at the company. This will mean a total outflow of 2,628 crore rupees. However, if this bonus is taken out of the equation, margins are in line with expectations. Well, here's the TCS management talking about the quarter gone by and the road ahead.
Vis-a-vis estimates, market estimates, both operating margin and the net profit net margin is above the estimate. Yes, on the revenue line, a tad below the estimates. And basically it is the three headwinds I talked about. We have had a dip in telecom, we have had a dip in diligent revenues, we had a dip in energy sector. All of these three we called out, saying that we are seeing headwinds and we are seeing volatility, and the energy sector is a pretty small sector from our point of view, so it's very difficult to predict given the current conditions. But otherwise, if you see any of the other mature sectors, there is no surprise.
That's N. Chandra telling you the headwinds the company had to face in the quarter that's gone by. Let's go across now to Kritika Saxena. She's been at the company's press conference. Kritika, what have the pitfalls been? Is there any word of caution coming about as far as the future quarters go? I know TCS doesn't give a guideline, but what exactly did it have to say?
Well, yes, as you said, in terms of the top line, it's a miss, but in terms of bottom line, we've seen a decent beat in terms of what the street was expecting, largely aided by a higher forex gain of 660 crore rupees, as well as a higher other income. Now, if you look at margins saw a hit of 48 basis points from constant currency, but we did see a better realization and a better offshore mix, offsetting that impact of cross-currency. So the big worry was cross-currency, and we were all talking about how that would be the major hit, but eventually TCS managed to score a 18 basis point positive margin benefit this quarter, which was higher than street expectation. Let me run you through the volumes. Volumes, of course, TCS usually surprises with volumes. This time around, it's 1.4%, but then if you exclude the three pressure verticals, which includes energy, Diligenta, and telecom, if you exclude those, the volume growth is actually 2.7%. So these three pressure verticals remain a concern for the company. They say that India continues to be slightly sluggish when it comes to the overall growth. However, for this quarter, there has been a broad-based growth. Again, if you look at the $423 million bonus that they have absorbed for this quarter, if you exclude that altogether, the overall performance is actually fairly positive. If you include that, it's definitely a muted performance. For FY16, the company says that they will continue to perform better than what NASSCOM has predicted. However, concerns in energy, in insurance, in telecom remain a little bit of a worry for TCS. Yet they say that order book in digital, in Europe, in continental Europe, in US remains fairly positive.
All right, Kritika, appreciate you joining us, and we'll hear more from the TCS management when they join us tomorrow morning on CNBC TV 18 for a special boardroom conversation. But the big story that is trending tonight is the bonanza from TCS to employees, that big bonus to commemorate 10 years of its listing. But let's move on now. It's unfair for foreign institutional investors to expect the government to waive off the entire MAT amount due till financial year 2015. That is the unequivocal message coming in from the Revenue Secretary Shaktikanta Das, who spoke with CNBC TV 18 Sapna Das. He says the government is in no way willing to give in to the demands being made by FII, especially when the appellate tribunal has upheld the Income Tax Department's order. He also defends the draft order issued on Kane India and its erstwhile promoter Kane PLC, saying that the Indian government is more than willing to fight it out in court. Here's a look at that special conversation.
When you provide exemption, the exemption has to take effect in the future. It has to have prospective effect. The FIIs, what they are requesting is an exemption for the prior period. It amounts to asking for a retrospective exemption. Well, I mean, nobody likes to pay tax. If anybody, there is a tax liability, somebody will be concerned. But please understand in the proper perspective. The FIIs approached the government that they have a problem. The government addressed that problem, provided them exemption, naturally with prospective effect. By doing so, government has isolated the past problem and government has segregated the future problem. Future is not a problem, but for future they don't pay tax. The past liabilities have been segregated. Now, in the past liabilities, as you would be aware, there is a ruling given by the authority of advance ruling. It's a judicial pronouncement. When there is a judicial pronouncement against you, and if you are aggrieved, what do? You have to go to the next higher judicial forum. If you are aggrieved with a particular judicial order, you have to go and appeal to the next higher judicial forum. You cannot expect the government to come in and make an intervention through an executive action or initiate a process of a legislative action to come in between a judicial pronouncement and a pronouncement which is in favor of the revenue.
You know what happens to the entire issue basically, because it will become difficult for the government to actually recover the demand on time. So it's more of an issue of principle rather than practical, application of law.
I don't want to prejudge the issue of whether government will be able to collect it or not. This will lead to litigation if the FIIs choose to take recourse to judicial proceedings. It will result in litigation. Tax litigations are nothing new in any country. You have tax litigation in very advanced countries. All over the world you have tax litigations. So are the tax litigations in India. It's not a good thing to happen. So there will be tax litigation. But please also remember in this context, the measures which the government has taken to eliminate tax litigation. But when the finance minister announced a reduction of corporate tax from 30% to 25%, he also said that exemptions, various kinds of exemptions will be eliminated in a phased manner. Once the exemptions are removed, take it from me, maximum number of litigations will get eliminated because majority of the tax related litigations in India relate to exemptions.
Would there be a treaty protection that will be available for investors under the MAT notice, especially if you talk about treaties, important treaties like Mauritius, like Singapore, which also see a huge amount of investment coming to the Indian market? There's a certain regime that the government has already agreed to on that front. So anything on that front?
You see, we have to look at individual treaties. We'll have to look at the kind of investments, the nature of investments which the FIIs have to make. So I don't want to make a sweeping remark here, but having said that, I would like to add that if tax is paid here and wherever we have a double taxation avoidance agreement, by and large, if the tax is paid here, the assessee should be able to get equivalent credit in his own country wherever we have double taxation avoidance agreement. So you pay the tax here and you can ask for tax credit in your own country.
Right. So moving on from here to the cane matter, again the same question that is going around is the fact that it's a 2006 case. Why is it that the notice came so late in the day, and what does the company do now? Because in 2006 they were not aware that this is how the tax treatment is going to be, and now suddenly there's a 20,000 crore demand plus on the Indian entity. On the parent company, again there's a separate proceeding that will now start. They have approached the DRP, and then they've also planned to put in a notice under the BIPA, the UK bilateral India treaty, the investment treaty. So how do you look at this matter? How do you respond to this?
You see, I don't wish to talk or comment on individual companies and their tax related problems, but since you have raised the issue, in the case of this company, you have the UK company, then you have the Indian company. Now there are two tax demands which are essentially two sides of the same coin. Yeah. It's for the same transaction. So if one of them pays the tax, the other automatically gets extinguished.
Right.
In this case, the first show cause notice was issued in January 2014, well before the July 2014 budget. So it's an old case in that sense of the term. It's not a case which came up now. January 2014, the show cause notice was issued. Company was asked to provide certain information. Company took some time to provide the information. The officers did not get full information they wanted, so officers had to make some effort to collect information from various sources. So once all the information was collated, the assessing officer made the tax demand and pass the final assessment order. And Kane has already gone to the court, and the matter is before the High Court. So we'll have to wait for the High Court orders and see what view the court takes.
Well, that's right. We will have to wait and see what the court decides. That's Revenue Secretary. But again, reiterating very, very clearly and unequivocally that FIIs cannot seek exemption. The government is seeing this exemption as a retrospective exemption. Feel free to litigate if you like. That's the message coming in from the government, but we don't intend providing any exemption or relief by way of an executive order. But the Revenue Secretary there also talking about the Kane case, and that was one of the disputes that the Delhi High Court took up today. The 20,000 crore rupee tax battle between Kane India and the tax department. The taxman is alleging, as you just heard, that Kane India did not pay capital gains tax when shares changed hands during financial year 2007. Kane India refutes those charges. Ashmit Kumar joins us now with all the courtroom action. Ashmit, two eminent lawyers, Mukul Rohtgi representing the government and Harish Salve representing Kane India, going head to head. Take us through the arguments and the fireworks from both sides.
Well, indeed, Kane crossing swords with the government, and as you pointed out, two legal heavyweights as well, and we did see quite a few fireworks. It all began with Kane India opening arguments, Harish Salve opening arguments, and he raised the R word here, the retrospective taxation. He went on to say that this is unfortunate that retrospective taxation clause was being invoked as far as this particular transaction was concerned. He also went on to argue that there is no question of capital gains given, that this was an internal restructuring within the group, and that no assets at any point did they leave the group itself. Harish Salve also went on to argue that as far as government's actions are concerned, they can be termed as oppressive use of force. And he also went on to argue that the critical argument that he made was with respect to the time bar. Importantly, he clarified that this transaction took place in FY07 and that the tax department was made familiar with all the developments, and yet the notice came as late as January of 2014. Now, responding to these charges, the government has clarified its position that it believes that the Kane, as far as its UK parent is concerned, did pocket capital gains to the extent of 24,000 crores. The government also claims that it has proof to suggest that in fact Kane's UK parent has admitted to making capital gains of 24,000 crores. But essentially the point that the government was trying to drive home is that this was not the forum for discussing, the High Court was not the forum for discussing the merits of the tax demand in this case, and that Kane India, should it choose to challenge the appeal, should do so before the DRP, the Dispute Resolution Panel, and not before the High Court. But essentially what we also have is that the government is seeking upfront payment of at least the principal amount of tax demand, and that is something that the Kane India will have to clarify on the next date of hearing, April 22nd.
Until then, even Vedanta Resources and Kane Energy PLC, the former promoter of Kane India, have sent notices for arbitration to the government. Ashmit, that was a high-profile case of today. Now let's talk about tomorrow. Nokia moving the Delhi High Court to lift the freeze on the Chennai plant. That case coming up tomorrow for hearing.
Indeed, we expect more fireworks tomorrow as Nokia's petition comes up for further hearing. Now, we understand that since October of 2014, Nokia's position has been that it seeks to sell the Chennai plant. That was, of course, the big-ticket plant, and Nokia has made its position very clear. It has expressed concerns on various occasions that it is looking, now that the operations are suspended for the 210-acre plant, it is looking to sell its stake. It is looking to sell the plant. And what we understand is that they have expressed this concern now by way of a petition in the Delhi High Court, and now they are seeking freezing of the Chennai plant. It was frozen, of course, in that heated contest that we saw between the Nokia and tax department, where the Chennai plant was excluded from the multi-billion-dollar Microsoft deal. Now what they're seeking is defreezing of these of the Chennai plant. The contention that they make is that they are in touch with various prospective buyers. Various buyers have expressed interest, but they are finding it difficult for closing these transactions given the freeze that is currently in effect thanks to the tax department. Now we understand that the Delhi High Court, this matter was taken up today by the Delhi High Court. They've agreed to hear this case, and tomorrow is when we can expect more clarity on the road ahead as far as Nokia's plans for looking after prospective buyers and possibly closing transactions. But of course, the big disturbance being the freeze, and that is something that Delhi High Court will
this is going to be interesting, Ashmit, because this is a matter where the Prime Minister has publicly stated that he would like this issue to be sorted out. In fact, we understand that interministerial consultations have been underway, and perhaps the tax department will not contest the plea or will not force the Delhi High Court to continue with that freeze is our understanding. So let's see how this actually moves, whether there is a softening of position there as far as the tax department is concerned. Appreciate you joining us there with those details. Well, here's another exclusive tonight. I'm flattered, but no thanks. That's a response from Indigo to Qatar Airways, which had expressed an interest in picking up a stake in the company. Speaking exclusively to CNBC TV 18's Malvika Jain, Indigo's president Aditya Ghosh said the company is comfortable flying alone and it's not looking for any partners. He's also ruled out an IPO anytime soon. Listen in.
We haven't decided on anything, so once we decide on an IPO, only then the question of what that amount comes to and all that. And so there's been absolutely no decision on that, nothing new on that front.
But Qatar Airways has been saying that they are really keen to pick up a stake in Indigo. Is there at all an interest, as far as Indigo is concerned, to partner with Qatar Airways?
We are actually not looking for any partners, but very flattering for Qatar to say that.
What would be the revenue implication of unbundling all these services?
So there has been a new opening up of this by the government a couple of weeks ago. So nothing has been implemented so far really. So still very, very early days. But it happens all around the world, and if it's and it happens in most mature markets in various parts of the world. So it's only a question of the consumer getting used to it and seeing the benefit of it.
And what would be the revenue implication of this move?
It just depends on what everything gets priced at and what gets thrown out. It's way too early to project that.
That's Indigo saying it's not interested in having any investor on board. Meanwhile, Indigo's competitor SpiceJet has sought a 3-year moratorium for its 211 crore rupees due to the Airport Authority of India. The airline also wants a complete waiver of the interest accrued on that entire amount. The AI, though, in no mood to comply with the cash-strapped airline's plea and has written back to the Civil Aviation Ministry. AI had granted a 2-week window to the cash-strapped low-cost carrier after the total outstanding far exceeded the total bank guarantees of 82.5 crore rupees deposited with the AI.
Well, you know, they've got many, a lot of leeway already. Didn't need to make the open offer. Now they're seeking an extension from the AI to pay their dues. The Civil Aviation Ministry finally taking a stand there and saying, or at least the AI taking a stand saying that its dues will need to be paid. That's the latest there in the battle for survival for SpiceJet. Now, India's largest cab aggregator, Ola Cabs, is moving into the fast lane after raising $200 million in October and acquiring rival Taxi for Sure last month. The Bangalore-based company has raised $400 million from a clutch of investors. Farah Bukfala reports on how this money is going to be used.
4-year-old Ola Cabs is cruising on the growth highway, while its arch-rival Uber weaves its way out of legal and regulatory tangles. Ola has raised another round of funds to fuel its expansion drive. The company has received $400 million or 2,500 crore rupees from a consortium of investors led by DST Global. The consortium includes new investors like GIC and Falcon Edge, while original Ola backers, SoftBank, Tiger Global, Steadview Capital and Axel Partners have also committed capital in this latest fundraising round. The funding deal values Ola at over $2 billion. Ola will primarily use the money to grow its network and make deeper inroads into Tier 2, 3 and 4 cities.
One is into deepening our reach across the country and also going deeper into existing cities. Right now we are in 100 cities. We aim to be in 200 cities by end of year.
Ola has two aims. First, to convince existing taxi drivers to enroll on its platform. Ola aims to have 10 lakh drivers on its platform within the next 3 years. That's a 10-fold increase from its current driver base of 1 lakh. Second, the company wants to make driving a career of sorts, making car ownership a viable proposition. Ola will extend its daily loan repayment facility, an easy down payment scheme known as Ola Pragati, to over 1 lakh drivers within 2 years. Ola will also use the funds raised to ramp up its technology base.
On technology, we will be investing very, very deeply, increasing our engineering strength. And in Bangalore is where we have an engineering center. We'll be investing a lot in that.
Out of the $400 million, Ola will specifically use $100 million or 625 crore rupees to accelerate the growth of Taxi for Sure, which it acquired in March. Like Ola, Taxi for Sure will also expand its network into more cities in India. In Mumbai, Farah Bukfala, Vora.
So Ola Kaz really pressing on the accelerator when it comes to its expansion plans. Moving on, the Reserve Bank today allowed banks to offer different interest rates on the same deposit tenures. One rate for those with a premature withdrawal facility and another for those without this facility. RBI added banks will have to provide the premature withdrawal facility for all deposits below 15 lakh rupees. Bankers said this ability to offer different rates for large deposits that can't be withdrawn is useful. It will help prevent large corporates from breaking their fixed deposits and fleeing banks every time another bank offers a little more. In other words, bankers said it will prevent rate shopping by large depositors. More importantly, it will help better matching of assets and liabilities.
Well, staying with news from the Reserve Bank, not good news though. The Mumbai police are probing an alleged threatening email sent to RBI Governor Raghuram Rajan. The email was allegedly sent from a proxy server bearing the name of the Islamic State. Police sources say they're not taking the matter lightly. Ritu joins us now with more details. Ritu, what action is the Mumbai police taking?
The email that was allegedly sent from ISIS, well, firstly, the email was sent from a proxy server, so the police could not immediately ascertain whether it has actually come from the ISIS, but it may also be a hoax. But like you said, the police are saying they will not take this matter lightly. In fact, the contents of the email was something to the effect where the sender said that he had received a huge sum of money to eliminate the governor, and if the governor was willing to pay him more, they could reach a decision. A very threatening mail received out of the blue from claiming to be from the ISIS. In fact, the Cyber Crime Investigation Cell of the Mumbai Police is currently probing this case. We've also picked up from Mumbai Police sources that they've also roped in Google to help them identify from where this email may have been sent. The governor, as you know, is currently in Washington in the US, and the police says that the security around the governor, which already is very tight, will be further tightened following this email. The sender, of course, as I said, is not been ascertained, but the police are taking no chances, and they're saying they'll do everything they can to get to the bottom of this issue.
The email could be a hoax, but the police taking no chances whatsoever. Thanks, Ritu, for joining us with those details. The industry body IMA has honoured some of the biggest names of India Inc. at a star-studded awards ceremony. So while Reliance Foundation chairperson Neeta Ambani has been conferred the Entrepreneur of the Year, HDFC Bank Chief Aditya Puri has received the prestigious Business Leader of the Year award. Sun Pharmaceuticals has bagged the Indian MNC of the Year. GMR Group Chairman GM Rao has been conferred with the Lifetime Contribution Award.
Well, speaking to CNBC TV 18's Anshu Sharma on the sidelines of the IMA Awards, Aditya Puri, the managing director of HDFC Bank, said that as deposit costs keep going down, more rate cuts will follow. Listen it.
Cut has come because the trend for interest rates is down, with inflation having gone down. So I think the trajectory for interest rates is down, and they will come across the board. It's only a matter of time.
CPI inflation is down for the past 3 months, and we expect a growth of about 7.8% and beyond in the next financial year. So do you expect more rate cuts this financial year? Though we didn't see one in the last policy announcement.
I think the governor has been saying that they've already cut the rates, and transmission has not happened to the extent that they've already cut the rates. You did see we dropped our base rate, and as the deposit costs keep going down and people are reducing the rate that they're paying on deposits, yes, there will be more rate cuts.
Yes, there will be more rate cuts. That's Aditya Puri for you. On that note, it's time for us to wrap up this edition of India Business Hour. Remember to tune in to the TCS boardroom early morning here on CNBC TV 18. From all of us, say goodbye. Many thanks for watching.